So we've just gone through one of the probably, I don't know the stats on this, but potentially the biggest crash in crypto history. Everything has gone down. Yeah. One of the biggest stable coins in the industry has failed. Whether we think that was predictable or not, it's happened. A lot of people are scared. As we were just talking about, I have lost nearly 300 followers in a few days. People are dropping out of crypto. And I think the message we need to get through to people is right now is the time to start learning. And there's still opportunities there. Crypto, yeah. Whilst this is probably the biggest crash, we've been through things like this before, not on the same level, not a whole stable coin failing, but I mean, I'll probably do a different video on the reasons behind UST failing and why it was kind of predictable. But still, yeah. I'm a good bet. But right now for this conversation, I think both so my perspective, I obviously do more fundamental analysis on crypto projects. I'm a long-term investor. I will take the bear market to have a look at projects for the long term and DCA into blue chips mostly at the moment, but then a couple of alts that I think will survive. But equally, it's a really good time to learn about trading, because obviously trading, although the macro environment is important, you're capitalizing on shorter term movements within that market. So I think, talk to me about getting into trading in a bear market, because you did that, right?
Yes, so I was going to say I actually started in February 2018. That was when I first started trading, got into any investments and, really started trying to make money work for myself. And failed miserably for months. It was horrific. It was really hard. Everyone was like, "Oh yeah, buy the dip, buy the dip, buy the dip." But by the time we actually got, I think it was like 3,200-ish or 334 on Bitcoin. That was the bottom. Everyone was exhausted, and you do often see that template of a market cycle, the Wall Street bets cheat sheet.
It's almost a meme.
Yeah, people. It is, but actually it's so true as well, because people do get to a point where it's depression and they're like, oh my God, we're never going to make it, Bitcoin's going to die, the markets are over, and actually people forget that the markets are over 10 years old now. It's a point where you've got different things going on, and yes, all right, the whole UST and Luna crash was horrific, and I really feel for the people that have really suffered on it. I mean, luckily we weren't in Luna at all, and I had some UST and Anchor, and I saw some sort of warning flag, so I got out straight away and got really lucky and still managed to sell at $1.
The thing with is, I think for experienced traders, I had money in Luna a little bit. I didn't touch UST, but I think it's the messaging, the 20% interest. I think it really appealed to new traders potentially, and it was almost marketed as a financial product rather than a crypto product. And that's why I do feel really badly. Well, I feel badly for anyone who loses anything in a crash, but it hurts this time.
It's horrific, and I mean, people have topped themselves over it, which is horrendous. I mean, just to put this out there as well, we said on our Twitters, if people want to talk, just reach out. I think yourself, me, anyone in our groups, we're always open to talking to people. I'd much rather have a chat with someone than watch them just crumble into the abyss and feel like it's not worth living. You will come back from it. Going back to the 2018 era, I mean, I bought things like Dragon Chain at above $5. Well, that, if you look at Bagsy Bot, every time I get a notification, 9 times out of 10, it's Dragon Chain new all-time low. It's just died.
Yeah,
so
we all make bad trades, and this is the thing. When you're investing in crypto, you've trading is different, but when you're buying projects, you've kind of got to think of them as startups a lot of the time. 10 of your 15 might completely fail. You're really banking on the one that does exceptionally well to outperform the ones that die painfully.
Yeah. And the difference between trading and investing, I mean, obviously investing, you buy and you hold and you dollar cost average into things. With trading, I wouldn't overly recommend leverage for everyone, especially if you're starting out, learn spot or at least paper trade a little bit, or just use very small amounts to get that kind of risk factor in. But with trading, you can trade up and down markets. So my specialism is leverage trading. I trade leverage 99% of the time. And when you're shorting a market, so like the current market, I mean, if you look on my Twitter, most of my sort of shouts have been to short XYZ. And I mean, I shorted ETH 2 weeks ago, maybe 3 weeks ago. And that ended up doing 200 and something percent for me in profit. So,
so
trade, but
it's interesting. I'm not a trader. I do fundamental analysis, but when I'm looking for movements in the market, and the only people I know who have called the tops and the bottoms with any sort of accuracy are traders. And this is why I think it's important for people to, even if you don't want to be a trader, have an understanding of what trading is and pay attention to people who do understand it and learn from them, because having a basic knowledge of everything is going to allow you to make decisions based on, more factors than just, right, okay, so I know that quant is a great token, it's got great fundamentals, long term, I think it's going to be amazing. But if the macro market and the traders are calling, a bear market and a crash, quant isn't going to survive based on, how it's going to perform in 10 years.
Nothing survives in a bear market. I mean, yes, things do.
They'll make it through the bear market, the ones with the good fundamentals. But yeah, I guess you need to have that wide scope of knowledge. So
I mean, if you look, if you just look on that point, just look at today, fan tokens, football fan tokens and chilies. That's pumped today. God knows why. I've got no clue why it's pumped. I mean, I'm not football at all. It bores the hell out of me. But could it be something to do like Champions League finals or
probably
whatever? But stuff like that, it does pump in a bear market, and fundamentals on that are shocking. All it is a fan token. It's not doing anything spectacular.
But if you can catch that at the beginning of a pump based on technical analysis, then that's how you get profit.
If you look at things like, I mean, going into a bit of detail on trading, you could look at things like divergences, trend line breaks, support and resistance breaks. There's so many different things that a trader can actually look at and say, okay, I'll buy here. This is my risk. So you'd have a stop loss sort of set wherever. If that stop loss hits, your trade's invalidated, so you were wrong. And I think a key thing with a trader that you need to be is open to being wrong. It's okay to be wrong. If anyone says that they're 100% of the time winning trades, they're bullshit. Absolute bullshit. It's not true.
Well, it's similar to the point I said. So on the long term, you've got to think in a similar way. So you invest in 10 projects, you've kind of got to expect that a percentage of those will fail. It's not just good ideas that succeed. You've got to have a team, you've got to have funds, you've got to have all of these different factors playing together. And it's the same with trading. You're never going to be able to call everything right. So you've got to kind of be open, to being wrong, and then resilient enough to take that next trade and understand the patterns over time.
Yeah. And when you are wrong as well, don't be afraid to walk away from the market for a day or two, or even a week. Some of the best traders in the world have crappy days. And if you have a crap day and you're in the wrong mindset, just walk away. It's the best thing for you, just to reset your mind and just chill. You're going to end up doing things like revenge trading and just forcing trades. Having a need to be in a trade is going to cause you to lose money. Unless you're incredibly lucky and you just strike out a few times and then win a few.
It's a similarity. A huge part of success in both is managing your psychological kind of ties to your trades and taking the emotion out. So a lot of my audience We're not traders, so people don't follow me for trading advice. At least I really hope they do not. So how, talking to a complete beginner, what would be the process? Where do you start learning about trading, and what would be the first steps to take?
It depends on what type of learner you are. So if you're like a visual learner, you can start with some very basics on like YouTube. You can join Telegram groups like ours, for example. Come and join JLB. You know, we're open to anyone that is a total newbie, like hasn't even set up an exchange, to people that even are a bit more advanced, and we recommend sort of sharing charts and stuff so that we can help people understand by just trial and error, which is, you know, that's how we learn. I started off with just some basic YouTube videos, understanding support and resistance areas, trend lines. Then you can look at things like setting up trailing stop losses. So if you're in a trade and you set a trailing stop, that stop loss will kind of follow price as it goes up, and then when it dumps, you're securing your profit within that trade.
Automatically takes you out of that trade at a certain
Yeah.
point. Yeah.
Which is I mean, that's one thing that I use pretty much on all of my trades in the end, is a trailing stop.
I see you mentioned that a lot. Yeah,
it's such a good tool as well. And there's a lot of things out there, but quite a few exchanges now are kind of tailoring to traders, where they're adding things like trailing stop losses and being able to kind of manage your trades a lot better. Whereas before it was kind of geared towards the spot traders, so people that were just buying and holding and stuff. So like if you had Binance, for example, over Delta, Binance never used to have the trading stops and
it
sort
didn't
of
when
other
I
things
used
like that. Whereas Delta is a slightly newer exchange, but they've got things like trailing stops integrated into their sort of back-end software, which is really useful to use.
So when you talk about spot trading and then adding leverage later down the line, spot trading, so similarly to how you would go onto an exchange and buy a crypto token that you want to hold for a while, is that what you mean by spot trading? So you are just taking that theory and moving it to trading. So you are, say you want to trade Ethereum, you want to learn how to trade, you're going to go onto an exchange, you're going to, how would you do that? Would it be manual? So you buy the Ethereum and then just look at indicators, and when you think the change is going to happen, you do that on the same spot exchange, or would you go onto a different part of an exchange?
So basically with spot, you can literally just buy and hold straight away. You could, some people like to get their money off of exchanges, so put it on like a ledger or a hardware wallet, or even a paper wallet if you're really old school. Others with spot, I mean, basically you could be a quick 15-minute trader. So I think you've tried sort of the lower time frames, haven't you, before, and you like the sort of adrenaline that it gives you and stuff. But some spot traders will buy and hold for days, weeks, months, whatever. It depends on what type of market you're in. Others will buy for a quick 10-15% profit, which could happen in a day, it could happen in a 15-minute time frame, it could happen whatever. So spot is best for people that are not wanting leverage, because you can't get liquidated on spot. So no matter how low it goes, I mean, unless it was Luna, for example, and it went 99% in a day, leverage, even on like say 2x or 1x, you can get liquidated. So if for example you were in a Luna trade, you were long on Luna and you had 1x, and you know your liquidation was at 0.01, you would have got liquidated and you would have lost all of your money. Whereas on spot, if it had gone all the way down but then by some miracle had come all the way back up, you're not liquidated, so you would be able to keep your money.
Yeah,
so that's kind of the key difference. For
the newbies, let's define what long means, what short means, and leverage. So leverage would be when you are well, you're going to explain it better than me. Go for it.
So leverage, you're essentially borrowing the money to put onto the trade. So you are being given the money from the exchange to boost your account to make a bigger gain, essentially.
Yeah, and I suppose a fundamental difference here between spot and leverage is if you're leveraging, you don't actually own the underlying assets.
It's a contract. So perpetual contracts is what they're called. So perpetual futures. So basically you're buying this contract for X amount and you're saying, okay, I'm going to sell you this contract back when the price is more. So that is essentially what the trading is. And then you've got longing. So longing is buying. So your long is essentially saying that you think that this asset is going to go up by X, Y, Z. And then short is just the opposite, where you think, okay, I'm going to sell it and then I'm going to buy this contract back at a lower price. So I'm going to sell it to you for $45 and then I want to buy it back at 25. So that's the difference between long and short.
So in effect, longing is betting on the market going up, shorting is betting on the market going down. And the way you decide how to go long, how to go short will be based on the indicators that you've learned when you're learning trading and looking for it's basically going to be pattern recognition along with knowing what's going on in the market to be able to say, right, okay, based on this indicator, the market's going to go up or it's going to go down. We saw yesterday. So if you have the Feds talking in America, you know, Bitcoin can fly up, it can fly down. So you've got to take the macro into account. But by and large, it's a bet on, you know, movements up and down.
Yeah, essentially. And I think this is why some places have essentially banned it and said, oh, it's just gambling. But, you know, people are allowed to gamble away on horses, yet we can't trade. You know, Binance, for example, blocked me from trading futures because I'm in the UK. So it's frustrating, but I
think it's quite different. So in my mind, I was actually having this conversation with one of our mutual friends, and obviously there's religions where gambling is prohibited, so that's completely understandable. I think I see trading as slightly different, and I guess I see it as different based on your knowledge level. So gambling, if you're going into a casino, it's very different. The odds are stacked against you. You can't really, there's people who can, but you can't really learn patterns. You can't look at past performance. You can't understand what you are betting on, quite the same as, you know, people who really understand macro trends, micro trends, indicators, you know, market movements, market makers, volume, all of the different technical things that you can learn mean that it's not really gambling in the same kind of way.
Yeah, exactly. And I think it's really tough to say, okay, yes, it's this or no, it's this. And, you know, I mean, I do this full time now. This is my job and my livelihood. You know, I feed my family with it, and, you know, we can pay our bills, etc. And it's taken a long time to get here. And I can understand on one side of it, people block it because people do get absolutely wrecked leverage trading. You know, we've had people that have joined the group and said, oh yeah, I'm 100x long. Okay, why are you 100x long? I want to make money. And it's like, okay, well, where's your risk? And it's like, well, what do you mean? What risk? What's risk? And it's like, okay, you shouldn't be leverage trading at all.
Yeah.
You know, and I don't know if you know wrecked plebs, but they actually ended up in wrecked plebs. And it makes me really sad when that happens, because, you know, people have worked really hard, and, you know, we know someone else, actually, not that we've had in JLB, but someone else that I know from a different group that made, I think, like 7 figures and gambled it all away on leverage trading. And
we've seen that a lot. We've seen a lot of people completely wrecked through high leverage, and we've seen a lot of people wrecked through going all in on assets. And both of those things, I think it's really important, especially whilst we're talking to beginners, that the most important thing that you can learn, both in fundamental, how many times am I going to say that word wrong? Trading, buying and holding, understanding different projects.
Yeah.
So trading is risk management. You need to diversify, but you need to understand, how much to diversify. You need to put a lot into learning what you're doing before just going in and going, right, YOLO, all in, 100x, everything in a risky asset. There's different risk levels in trading, and there's different risk levels in buying and holding crypto. When it comes to risk management in trading, one of the things I have seen you talk about a lot is how much of your portfolio to put on a trade. Obviously, stop loss and take profit, we've kind of touched on, but
yeah.
you want to talk through the few most important things to learn in terms of risk management?
So the key one, and I was literally just talking to someone about this in the group just now, actually, and it's a 1% of your portfolio per trade. So say you've got $1,000 portfolio, you could say put $100 in a trade with a 10% stop loss away. So that 10% would turn that $100 into $10. So you'd have a $10 loss if your stop loss hits. So that is 1% of $1,000 portfolio. And if you compound that over the years and over time, I mean, yes, all right, $1,000 is a smaller portfolio, but say you had 100,000, you could do $1,000 risk. So that's still 1%, and it will gradually build up. You could have 10% risk on a trade. You're going to have 10 trades. That's 100% gone. You're not going to be able to have that proper portfolio management where if you have had a bad losing streak and you do lose 10 trades, you haven't lost 100% of your portfolio, you've lost 10%. That is much easier to come back from than losing your entire account and starting over again. And it's also so mentally draining. If you lose a huge chunk, you're going to have less confidence, you're going to have the emotional scar, if you will, to be able to battle through as well. You're going to find it really, really tough to come back from.
Yeah, absolutely. And that's the point of resilience as well. You can be as resilient as you like, but equally you really need to set yourself up for success. And part of any great success story is a hell of a lot of failure. Anybody who says different, I would be very surprised that if they're successful. You have to repeatedly fail to succeed. So if you're not setting yourself up to fail as many times as possible to learn, I think one thing I have learned in crypto over the years is it's really an environment where you learn and earn from your failures. The more I've lost, the more I've learned from that situation. And it's kind of, you pay to learn, but then you also get paid to learn as well, in terms of you spend a lot of time analyzing different projects, that will pay off. If you spend a lot of time learning trading, that will pay off. Learning about airdrops is the biggest, the biggest earner in terms of time invested versus money invested that I've ever seen, really.
I think so. And I think we actually have got, I know it sounds quite cheesy, but we've got documents in our academy which are called Learn While You Earn. And it's about people, understanding the markets and learning little tidbits about, okay, this is the support and resistance. If you had X, Y, Z, you could earn. And they are learning with us in that regard too. So, it is a bit cheesy, but it helps people remember, and actually I think it's a good little, and I think it's a good little thing, it's not even a gimmick, but like just a friendly reminder that people need to learn and earn rather than just earn. We're not here to hold your hand exactly through everything. We are here to push you to learn properly and to understand, and share your own charts, and we'll help you understand your own charts. And I mean, even in our free group, we do that a lot, where we want people to really push themselves. In our academy is essentially like a college course. We want people to learn and to push themselves, share what indicators they're using, don't just use the same ones that we do. Trading is about a personality. So you've got to find your own way with the help of others, essentially. But I for years, when I first started, so in the bear market in 2018, I was looking at all these different YouTube videos and, okay, right, here's this indicator, this is how this guy uses it, he's got this, and this. And I could not get it to work for me. Every trade I took, it went wrong, or I'd get maybe 1 out of 5 right. And okay, so then I started to do things like counter trade myself, and then I was journaling why the counter trades were doing better than the ones that I was taking originally, and it kind of gave me an edge of, okay, I can use this indicator this way instead of the way that this guy's shown in a YouTube video, but you can still get the decent indicators from those places. So same as us, people can get indicators from us. I mean, Mojo, Bubble, and I, we're all very different traders.
But that's a benefit for that group.
Yeah, and we won't just always agree with each other. Bubble got out on out of the market at like 58k back in November, December time last year. He did really well, and Mojo and I are like, really, like, it's above the moving averages, it's this, and hands up, we missed out a little bit compared to him. He did really well. He secured some really good gains and didn't give it back to the market. So we challenge each other still, and we're still learning. I'm still learning every single day. And I think
everyone is, until the day they die. And I think that's one reason I love your group. We see a lot of trading groups that just offer signals, and groups, I would say, stay well away, because you're not learning, you're not understanding why they're calling those trades. So you're never going to be a trader. You're just paying for somebody else to throw numbers at you.
Yeah, I think there are good signal groups out there. Don't get them all sort of tarnished with the same brush. I think there is a kind of, what's the word? Like a general assumption of the entire space of that.
Yeah, I always think of them as vultures.
Yeah, most of them are, unfortunately, but I mean, we offer just signals. So if people are feeling like they're a bit more advanced traders, but we will still try and give reasoning for our trades. We'll say in the setups group, okay, I took this trade because it's above the moving averages, and I don't know, the stock is
your signals are not the type of signals I mean. So and I'm specifically talking to my audience here. So if you're a beginner going into a signals group, usually what you'll get fired is a take profit, stop loss, entry, and that is it. It's literally just numbers. Your trading signals are very different in the sense of, you'll give a chart, you'll give a kind of reason why you're taking that movement, and that educates people by reading it. If somebody is selling you a product that doesn't allow you to understand how they're coming to their conclusion in this space, I think it's very risky, and I'd never say to a beginner to do that.
Yeah, and I mean, it's a mistake I made when I first started. I joined a signals group. I didn't know how to trade properly. I didn't know managing risk, and I just dived in, and the market took another turn, and subsequently I lost again. So, it is all these little losses that does help you learn. I think with signals as well, you need to be careful of the ones that are pump and dump groups. So something that people do miss is there'll be like a group that says, oh yeah, the last call we made did 250x and at the peak, etc. And what they do is essentially say, right, this is the exchange, this is the coin that we're going to buy, and they won't give you the name until like 5 minutes after they've already started buying, and their VIP clients have started buying as well after 2 minutes they've started buying. So, and then by the time you get the free public one, it's already like X amount up, and you buy in there and it shits the bed.
Yeah,
and that is a pure pump and dump, and you'll see it on charts all the time. It'll be a random coin, probably a low liquidity, one that's not got masses of liquidity. So like Bitcoin, for example, is you're going to nigh on impossible to pump and dump that.
Yeah, but all the micro
But
caps, if you've got a
yeah,
coordinated group like that, it's very easy to go in and manipulate the market.
yeah. I mean, look at like Telcoin, for example. Telcoin back in the day, or Dentacoin, even Dragon, probably. You know, the stuff that is real low liquidity on the smaller exchanges, they're the ones that you just got to watch out for. But yeah, pump and dump groups still well clear.
Yeah, I agree. We've only got a couple of minutes left. So one thing that we wanted to go through was a couple of book recommendations, one each, because these are great starting points. I would always say read the Bitcoin Standard. I put it off for a long time because I was like, I know about Bitcoin, I'm not going to learn anything. You will learn a lot about not just Bitcoin, but monetary standards, where it all comes from, why it's important. Read that book. What is yours?
Yeah, I need to read your one, but mine is this, Trading in the Zone by a guy called Mark Douglas. And it's got absolutely nothing to do with crypto markets at all, but it is fantastic in terms of just learning about your own mind, and just getting into a zone of not being afraid of the markets. So he says something about like a kid was bitten by a dog, and that child was forever scared of dogs, you know, no matter what breed it was, what size, etc. And then he came to learn that actually not all dogs are scary. And it's the same with trades. You know, you could have a really bad trade and then you could be like, oh crap, I really don't want to get back in the market now. And actually your next trade could be phenomenal. You could do really well, you could make a lot of money, and
It's so
it's just
relevant
having that
now.
mindset. Yeah,
Yeah, it's
exactly. You
hugely
know,
relevant now. People are leaving the market
yeah,
at huge rates. So I'm going to read that one because I
yeah,
haven't.
definitely
Finally,
worth it.
how can people contact you? What is your group called? I will obviously tag all of this, but hit us with that info. And what do you offer?
Yeah, so you can find me on Twitter. It's at DCStar84. You can hit us up on there, or all our links are on there, or on Telegram, Justice League BTC, all one word, super simple. But yeah, we'll give you the links as well. We are on Instagram, but it's very new, so it looks a bit tired.
Instagram's hard, man. It's not where the
It
trades
is,
are.
yeah. But yeah, just, you know, if anyone wants to reach out on Twitter, I'm really active on there. You can find Mojo and Bubble on there as well, and our JLBTC page as well.
Yep. Okay. Awesome. Well, this has been really good. We'll probably do some more videos in the future to go through setups and stuff like that, maybe for
Yeah,
beginners.
I think I'd be quite open to hearing what people want to hear as well. You know, I'm quite happy to try and cater to newer members if they're, you know, a bit more junior, don't quite understand the market at all. Let's go through some real proper basic bits. You know, that's absolutely fine. We can get you set up on some exchanges and kind of learn at your own pace. I would say set up TradingView and just, you know, have a look at charts, you know, see what a candle is. Some people don't even know what a chart is. You know, people don't know what candles are and how to look at them. So we'll do some basics, definitely.
Yeah. Awesome.